You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking to Michael Spence, who's a world authority on growth in developing countries and on the convergence between advanced and developing economies. His newest book is called The Next Convergence, The Future of Economic Growth in a Multi-Speed World. For his contributions to the analysis of markets with asymmetric information, he received the Nobel Prize in Economics in 2001. Mike, it's a pleasure to have you.
Great to be with you, Douglas.
So in your book and in the past, you've spoken a great deal about the concept of third world countries or developing countries. In my business as a financial planner, we often talk about the emerging markets. In the old days, they used to call them backward. Is there such a concept anymore of these developing countries?
Well, there is. I mean, when I was writing the book, I realized this pattern of growth in the developing, what we now call developing countries or emerging economies, had really started after World War II. And, it's a long journey for them, so there's lots of them in various stages of development on their way, they hope, and I think with reasonable expectations of being advanced countries. But the terminology is interesting. I mean, it used to be backward, and that kind of gave the impression that, nothing changes. They were going to stay poor forever. And then it evolved to developing, and then we got the term emerging markets. Jim O'Neill invented the term BRICS. He now tells us that these economies have emerged, so we've got to stop using emerging, and so on. So the terminology evolves, but the century-long journey where they sort of essentially catch up after 200 years of divergence, starting with the British Industrial Revolution, that we're a little more than a midway through that century, and the global economy is changing pretty fast.
People often refer to Israel as an emerged country. Would you say that fits the bill?
Yeah, I do. I mean, Israel is a high-income country. It has an economy that's based on high productivity, innovation. Lots of startups. It has all the highly educated. It has all the characteristics of an advanced economy, and it's gotten there very quickly because the human capital is so extraordinarily talented.
You talk a lot about human capital in your writing and the concept that countries are able to succeed tremendously well because of their human capital as opposed to, let's say, their natural resources. On the other hand, a country like Saudi Arabia, which hasn't really offered much to the world except oil, certainly I wouldn't say they have human capital so much as just natural capital. Yeah. Is there a way to determine whether a country will succeed based on its people or its natural resources?
I think the view that's emerged as we've learned about this complex process we call development is that in the end, sustained well-being, high income, relatively high wealth and so on depends on human capital. And that natural resource wealth and that kind of thing can be an asset if it's used properly on the way through. Many of these resources are not renewable, so they in a sense they aren't permanent bases for prosperity. The problem, of course, and it's been written about a great deal, is that natural resources frequently distort the political process toward trying to capture the rents. And that destroys most of the sort of policy and investment underpinnings that we now know are associated with high growth. So people have come to call natural resource wealth a curse rather than an asset. But properly used, it is definitely an asset because it allows you to invest in things, including education and infrastructure and so on, that promote both growth and then eventually innovation and sustained prosperity.
So if you look at countries, the United States, I think, is a good example, which has fallen in a great in terms of its international education levels, right? When the United States students are tested against others, they're no longer as high as they used to be. Have the Americans forgotten this lesson?
Well, I think in a way we have. I mean, we've been in a pattern in America for about 20 years that could be characterized as excess consumption and underinvestment. And the underinvestment includes on the public sector side. So the infrastructure, relatively speaking, is declining and depreciating. The educational effectiveness, I don't think it's a matter on the educational side of dollars spent, or resources allocated so much as effectiveness. And that's starting to cut into, our competitiveness and our productivity levels in various parts of the population. So I would say yes. I would say this is something that where we lost the thread somewhere along the line.
We are talking to Michael Spence. He won the 2001 Nobel Prize in Economics. He's also the chairman of the Commission on Growth and Development and the author of his newest book, The Next Convergence, The Future of Economic Growth in a Multi-Speed World. He's been talking to us about developing countries and countries that have already developed. Mike, since World War II, the main powers in the world were certainly the United States and the Soviet Union and Western Europe. I'm getting the feeling that's changing a little bit. China is certainly bigger in the news, but what direction are we going? Where should people be looking in the future for the next world leaders?
Well, if you project out far enough, Doug, I mean, the future economic giants actually are probably China and India. They're both in high growth mode. India is, by my estimates, at 8 or 9% growth, about 13 or 14 years behind China. That doesn't sound like very much, but actually it makes a huge difference in incomes because at those growth rates, you sort of double every sort of 8 or 9 years. So India's behind, but if they keep up the growth, and there are obvious issues in both countries about whether they can sustain this. The chances are pretty good that we're looking at a world in which there's a very big country called China, which is now the second largest economy if you don't count Europe as one. It'll probably be the biggest economy in another 10 years or so. Not the richest, for sure, but the biggest. You've got India coming along. You've got Asia as a bloc. And then you've got the European Union or the whole European complex on the one hand. Japan can't be dismissed. You've got the North American complex, which isn't going to be small, even projected into the future. And finally, you've got high growth in Brazil pulling a lot of Latin America along, and even Mexico starting to recover in terms of economic performance. So it looks like a world in which the dispersion of economic power for an extended period is going to be much wider than anything we've been used to in the past. And that's, of course, reflected in the fact that we now have the G20 rather than the G7 setting, global economic priorities in theory. Now, I mean, the question people ask, and nobody knows the answer, is with all that heterogeneity built into the systemically important countries in the world, as you find them in the G20, will they actually be able to kind of come to some conclusions about managing the global economy in terms of stability, equity, sustainability, and all those other things that are important on longer time horizons?
And the answer is?
I think the jury's out on that. But I think there is something you can say, which is if they don't, then we're going to live in a world for an extended period in which the dimensions and the level of interdependence is way out ahead of the ability to manage, the potential imbalances and instability. So it'll be a pretty volatile world if they don't succeed over the next 5 to 10 years in sort of getting their arms around some of these things.
So let's move out of the Western world now and talk about, for example, up-and-coming Africa.
Yeah.
Is it in fact up-and-coming, and is it just that we all sort of hope it will be okay, and you have philanthropists, not the least of which is Bill Gates, putting a lot of money in there, and governments, or are the cultures just so different that there's never really going to be a development in Africa, let's say in our lifetime?
Yeah, I'm pretty optimistic. I mean, Africa had a pretty bad hand to play. I mean, it was a continent put together kind of haphazardly as colonial empires, have collapsed. These things we call now countries weren't really countries in the sense that we normally mean the term. There were bunches of tribes and different religious groups and no real national identity. And that's changing. There have been great leaders like Nyerere and others in Africa. There's a new generation of leadership that takes ownership. There's a growing pattern of growth in Africa. So it's a long haul, and it was a tough start. But I think there's very good reason to be, optimistic about the future of Africa. And the simple truth is that the growth in the rest of the developing world will probably help. I mean, China is going through the middle income transition. It's going to exit the low labor cost, labor-intensive process manufacturing industries. Justin Lin at the World Bank, as the chief economist, says that will create for developing countries at earlier stages of development probably 85 to 100 million jobs.
Wow. I
mean, it's extraordinary and opportunity. And I think Africa will have an important role as they develop, coming along a bit later in filling that gap. So China's the biggest investor in Africa by far now. People worry about it being exploitative if it's focused on natural resources, but actually it appears to be focused on both their need to secure natural resources, but also Africa's need for real, targeted investment to help with the development process. So on the whole, I mean, you could make a negative case, and say it's pretty fragile still, and there's lots of places where it could go wrong. But on the whole, the trend has been upward, and even in the crisis, Doug, Africa, I mean, the emerging economies' resilience in the crisis was extraordinary. I mean, to the point that I think even people who pay a lot of attention were surprised on the upside by that. And and they continue to grow. And Africa's part of that pattern now, and that probably wouldn't have been true, 15 years ago or so.
So as an individual investor, right, as you know, this is, in fact, a personal finance show. At the end of the day, we all have to decide where to put our money. Do you have any countries that specifically speak to you now?
Well, I think the major emerging economies, are definitely an important and growing part of a sensible portfolio these days. I mean, it's the high growth part of the world. I mean, that means sort of China and India and Brazil. I would probably add now Mexico, Turkey, South Africa, I think, So I think that in terms of asset allocation, Doug, the asset allocation should be drifting in the direction of the emerging economies in various categories. One has to be careful. I mean, these are not easy investment environments, so I wouldn't suggest that anybody kind of go and try to invest on their own in these places, as opposed to through people who have developed real expertise, on the ground expertise about how to navigate in these economies. But there's another strategy that I think people can use, which is important. Multinational companies that have significant operations and exposure to these economies are going to participate in their growth, and provided the price is right, investing in those companies in markets where the currencies are understandable and somewhat less volatile is a good way to participate in that growth. Without having to sort of go figure out what companies in China are actually doing well, or which private equity firm is on the up and up.
Right. Let the big companies do the homework for you and you just piggyback on it.
Exactly.
Very interesting. We have been talking to Michael Spence. He is the chairman of the Commission on Growth and Development. He's the author of The Next Convergence, The Future of Economic Growth in a Multi-Speed World, and he is the Economics Nobel Laureate in 2001 for his work on the analysis of markets with asymmetric information. Mike, we are just about out of time. It's been fascinating, and I hope we'll have you back on the show. But in the last few seconds, could you tell me how could people learn more about the work that you're doing?
Well, I think one good way to do it, I mean, I'd be delighted if they visited the website or took a peek at the book. But the number of people who are very knowledgeable about developing economies, about the global financial system and so on, write for a thing called Project Syndicate each month. I mean, very top-flight people, Joe Stiglitz, Danny Roderick, Mohammed Al-Arian, and many others. And I write a monthly column. So I think going there and looking is not a bad way to get some insight into that. The other thing I would say, I mean, I can say it very briefly, is that, the financial analysts in the major financial institutions that have become global, are really, some of them are really now quite good and insightful. And I read them often to try to stay abreast of what's going on in the global economy in the developing world as well.
Okay, those sound like very good advice. Mike Spence, thanks so much for joining us today.
No, it was a thrill. Thank you for having me.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.